In many ways, I still believe that this process of approving the ETF and having BlackRock be the biggest has ties to an ill-fated, I will say, attempt to control the markets, right? I don't know if you've seen the clip of the guy who runs the Chicago Mercantile Exchange saying, "We'll tame Bitcoin." I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures.
Last year, there was a lot of excitement about the sudden interest of the world's largest asset manager in Bitcoin, the world's leading cryptocurrency. Since its creation, Bitcoin has been the direct antithesis of everything Wall Street. But BlackRock broke the divide by applying to the SEC to offer a spot Bitcoin ETF. The excitement became even more heightened when BlackRock CEO Larry Fink, a former Bitcoin critic, described the leading cryptocurrency as a global asset that could protect investors from currency debasement. Months later, during another interview, Fink called one of Bitcoin's rallies a flight to quality. He also noted that there was a lot of pent-up demand for cryptocurrencies in all parts of the world. Since then, Fink has been true to his words and has continued to promote Bitcoin and crypto positively. However, renowned hedge fund manager Mark Yusko is not altogether certain of Fink's true intentions. During a recent interview with Sin City Crypto, the Morgan Creek Capital founder and CIO discusses alleged plans between the Securities and Exchange Commission, BlackRock, and big financial services firms like JP Morgan that have been named authorized participants to deeply infiltrate the cryptocurrency industry so they can manipulate prices. Yusko explains that if not for the court orders and how publicized the whole process was, the SEC would have approved only BlackRock's application and delayed other applications until much later. We will now bring you clips from the interview as Mark Yusko gives an insightful analysis of the Bitcoin ETFs and how the ill-fated plans have been nullified. Please watch the video to the end, give it a thumbs up, and don't forget to drop your comments and observations in the comments section below. Also, if you want more videos with Yusko and other prominent investors and expert analysts, subscribe to the channel and turn on post notifications. Thanks for watching.
For years, any commodity that has futures has been subject to manipulation.
Yeah.
Right? If in the old days, if I had a barrel of oil and I wanted to sell it to you, I actually had to have title to that oil. I had to be able to go produce that actual barrel of oil, deliver it to you. You had to have facilities to take delivery, and we could have a transaction. And then they created the world of futures. And now I can create a paper barrel of oil out of thin air, like literally, there doesn't have to be any oil. And I can promise to deliver you oil. And as long as we settle up the transaction before the date, I don't have to go find the oil from somebody and buy it and deliver it to you on some tanker truck and send it up to Chicago. And so what happens is you get naked shorting on the other side. You can have naked long. You can get, creation of many, many, many paper barrels out of thin air. And what eventually happens in all these commodity markets is you get a big supply-demand imbalance caused by the creation of these paper commodities. And you've seen it in oil markets, you've seen it in grain markets, you've seen it in the gold market. I mean, the gold market is famous for this, right? All the GLD longs, I shouldn't say all, many of the GLD longs are just offset by shorts from JP Morgan and Rothschild Bank in London. And they can manipulate the price of gold. And the thing I love about it is they're not doing that. Like, well, JP Morgan actually admitted to doing it. They actually paid a fine of $960 million, almost $1 billion 2 years ago. But I love their comment. They're like, yeah, We paid the fine, but we didn't have to admit guilt. I love that part. You can pay $1 billion and not admit guilt. But
Funny.
we made 20 billion, so it's like a cost of doing business. I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures. And part of the reason people think that the launch was a failure is that's precisely what happened for the first week. Right? You had the people come in before. We went from 40K to 47. We had that nice parabolic rise. And then you had the launch. And it was interesting, very underreported. I tweeted about this, but no one cared. There was a launch of a second futures contract precisely on January 11th, the exact same day as the approval of the ETFs. So you basically had a whole bunch of people shorting futures against these longs. And you had the liquidation of GBTC shares because they had high prices, and people who didn't have a tax problem were like, I'm out and I'll transfer. So you had a combination of factors that pushed prices down. People were like, oh my God, it's a failure. Like, no, you're missing the forest for the trees. You bring up the point, right? There are groups, Fidelity being one, and eventually all of them, have said, we're going to put in 1%. Now, Vanguard, Bank of America, Merrill Lynch, LPL this morning, UBS have all said, nope, this is still too risky. Now, what that is code for is Ms. Warren called them up and said, do not allow your client. If you look at the largest campaign contributors to Ms. Warren, you will find a stunning similarity to the largest financial services companies in the country.
Despite the alleged conspiracy between these large financial services firms and our senators and regulators, Yusko is certain that spot Bitcoin ETFs have been and will continue to be great for Bitcoin and, by extension, other cryptocurrencies. According to the renowned hedge fund manager, at least 1% of the $30 trillion currently being controlled by financial advisors will be diverted into Bitcoin. He admits that the process might be slower than initially expected, but things should begin to speed up rapidly over the next year or so. An example is Fidelity, which recently announced it'll be allocating 1% to spot Bitcoin in its all-in-one conservative ETF. This is undoubtedly a huge milestone for Bitcoin, and it is expected that many other institutions will make similar moves within the next few weeks and months. Let's get back to Yusko's interview.
My guess is, in the long run, and Eric Balchunas said this, right? He did the math. There's $30 trillion controlled by advisors at these big allocation shops. If 1% comes in to Bitcoin through the ETFs, that's $300 billion on an asset that trades about $10 billion a day. That will have a massive price impact. It will also solidify the long-term kind of penetration of Bitcoin into financial services. But most importantly, what it'll do is it'll sop up all of the incremental supply from mining for the next few years. And I made a big statement, and I might not turn out to be right, but I still made it. I believe this year, in 2024, more fiat will be converted to Bitcoin than all the previous 15 years.
Wow.
Which is not that big a stretch because, we've got about a $900 billion market cap. But most of that isn't money that came in.
Right.
Right? Yeah. When it was $10,000 price, about $10 billion came in through GBTC, and the price moved to almost $60,000. So much of that market cap is actually just price appreciation of the original hodlers and miners. And so I don't know the exact number, I probably should, of how much fiat has converted into Bitcoin since inception. But I think 300 billion, which could come in over the next year, would probably be close. It started, but it's the very, very tip of the iceberg, or that's probably the wrong analogy, but it's the very beginning of a wave. Think about, it's the butterfly wing flapping in Japan, and then you get a tsunami in California. I mean, it's literally going to look like that, right? There's this little tiny ripple in the water, and then it's going to start to grow, and it's going to start to grow, and it's going to start to grow, and it's going to start to grow. And eventually we're going to be talking, billions and billions of dollars every day that's going to come in. And, you got people saying, Saudi Arabia is going to buy 1 million Bitcoin. Okay, maybe. I mean, they might be smart to do that. I mean, they have an amazing stranded natural resource asset in Saudi that they could monetize if they got more involved in Bitcoin, particularly mining. And there are lots of corporations that are looking at what MicroStrategy has done and saying, I mean, we, to a much smaller degree, much smaller, we have on balance sheet Bitcoin in our fund. We run a Bitcoin fund, and we put Morgan Creek balance sheet assets in there. So I think that's going to become more and more of a commonplace thing. Hedge funds have been around. Most of them were using the futures. I think they're going to migrate eventually to spot. Some of them are sophisticated and they've already been in spot directly. They're probably not going to change. They've got Bitcoin base accounts. There will be lots and lots of other mutual funds, other ETFs, brokerage firms that integrate this, and there are institutions too, right? If Merrill Lynch, Bank of America Merrill Lynch changes their mind, which I think they will, and says, all right, we're going to include this in our model portfolios, it could go into lots and lots of products across their platform.
Fidelity's announcement caused a lot of excitement in the Bitcoin community, possibly contributing to the ongoing rally. According to the announcement, Fidelity Investments Canada has incorporated a 1 to 3% Bitcoin allocation into its all-in-one asset allocation funds, which include spot Bitcoin ETFs. The firm believes this is a low-cost solution that adheres to an integrated strategic asset allocation model and consistent portfolio rebalancing. The firm's announcement reads, "The strategic allocation of the Fidelity All-in-One Conservative ETF, FCNS, is designed to offer a balanced investment approach with a mix of approximately 40% equities and 59% fixed income ETFs, now with an added 1% in cryptocurrencies." Many people have applauded the decision on Twitter. Senior Bloomberg ETF analyst Eric Balchunas remarked on the significance of this inclusion in a conservative fund, adding that it reflects a very positive outlook on Bitcoin. Others noted this is a significant milestone that will pave the way for other financial institutions to follow suit. Please share your thoughts on Mark Yusko's interview, especially all he has said about BlackRock, JP Morgan, and the SEC. Also, ensure you smash the like button, subscribe, and turn on post notifications for more videos. Thanks for watching.